Welcome to our video on fractional reserve banking, a system that has a significant impact on the economy. In this video, we'll dive into the details of fractional reserve banking and explain how it works. We'll also discuss how fractional reserve banking affects the economy, and we'll compare it to the gold standard, which is a different monetary system. What is fractional reserve banking? Fractional reserve banking is a system in which banks are only required to hold a fraction of their customers' deposits as reserves. This means that when you deposit money into a bank, the bank doesn't keep all of your money in a vault. Instead, the bank can use a portion of your deposit to lend money to other people. The amount of money that the bank is required to hold in reserve varies by country and by the type of account. For example, in the United States, banks are required to hold a minimum reserve of 10% of their customers' deposits in their vaults. This means that if you deposit $1,000 into your bank account, the bank is only required to keep $100 in its vault, and it can use the remaining $900 to make loans to other people. How does fractional reserve banking work? When a bank loans out money, it creates new money in the economy. For example, if the bank uses $900 of your deposit to loan to someone else, that person can spend the money on goods and services, and the seller of those goods and services can deposit the money into their own bank account. The second bank can then use a portion of that deposit to make its own loans, creating new money in the economy. This process can continue multiple times, leading to a multiplication of the original deposit. This is known as the money multiplier effect. Fractional reserve banking has a significant impact on the economy. When banks create new money, it increases the money supply, which can lead to inflation. Additionally, when banks make loans, they're injecting new money into the economy, which can lead to economic growth. However, if too much money is created too quickly, it can lead to inflation, and if too much money is created and injected into the economy, it can lead to asset bubbles and financial instability. Furthermore, if there is a sudden loss of confidence in the banking system, people may withdraw their deposits en masse, which can lead to a bank run, where the bank doesn't have enough reserves to meet all of its obligations, causing a financial crisis. Differences from currency backed up by gold. In the past, some countries used a gold standard, where the currency was backed by a certain amount of gold. This meant that the amount of money in circulation was limited by the amount of gold held in reserves. However, this also limited the government's ability to stimulate the economy through increased spending. Today, most countries use a fiat currency system, where the money is not backed by any physical commodity but is instead backed by the government's ability to maintain economic stability. This allows governments to create more money and stimulate the economy when necessary, but it also increases the risk of inflation and financial instability. In conclusion, fractional reserve banking is a system in which banks are only required to hold a fraction of their customers' deposits as reserves. This system creates new money in the economy, which can lead to economic growth, but it can also lead to inflation and financial instability. Understanding the differences between fractional reserve banking and the gold standard is important, as it can affect the stability of the economy. Thank you for watching our video, and we hope you now have a better understanding of fractional reserve banking and its impact on the economy. It's important to note that fractional reserve banking is a complex topic and there are ongoing debates about its effectiveness and drawbacks. However, it's clear that fractional reserve banking has become a key part of the modern economy, and it's important to be aware of its impact on our financial system. If you have any further questions or would like to learn more about fractional reserve banking, please feel free to leave a comment below or check out some of the resources we've linked in the description. Thank you for watching, and we'll see you in the next video.